Hi everyone, welcome to today's video. So first and foremost, I really hope that all of you are keeping safe. COVID third wave is rising and it is creating a lot of health related panics and also depleting the investor sentiments. So I'm shooting this video from the point of view of number one, discussing whether or not we are still in a bull run or is this COVID problem going to accelerate and derail the economy? Second, I'm going to do a macroeconomic analysis and tell you some of the investment opportunities that you could consider in 2022. Third and finally, I'm going to talk about one new stock that I'm looking to aggregate now. This is Mr. Saurabh Mukherjea's stock. A lot of you have commented that I look like Mr. Mukherjee, I talk like him. In case he happens to see this video, I would love to invite him for a talk. That would be amazing if I get a chance to speak with him. Let me know. In case any of you know how I can contact him, and also tell me if you would like to see that collaboration, I would love to speak with him. So let's get the analysis started, and let me first and foremost show Mr. Saurabh Mukherjee's viewpoint on the Indian economy.
I think the COVID story is relatively well understood now. There will be various waves of COVID. The medical establishment, the health authorities globally are fairly alert and awake to this. And therefore, the economic disruptions from COVID will be much, much more muted in 2022 than they have been over the last couple of years. Now, if you have a solid economic recovery, the best way to benefit from it is invest in high quality lenders, high quality financial services companies more generally.
So let me try to build upon the point that Mr. Saurabh Mukherjee explained. And first and foremost, let me help you understand whether or not we are going to stay in the bull run, or whether the bull run has started or whether the bull run has ended. Let's have a brief conversation regarding the same. So we can analyze this by doing a pro and con analysis of the Indian economy right now. If you do a pro analysis, we will clearly realize that there are three great things that are happening in the Indian economy. The first is that our level of debt has been actively managed, and it's not as if that our government has gone bonkers in terms of taking more and more debt. Now here is the graph that you can see, and you can clearly see that even from pre-2020 levels, the debt to GDP ratio has not gone haywire. Now, this is a very big positive for an emerging economy like India, because if you analyze the macro situation in Pakistan or Sri Lanka or Turkey or Lebanon, all these countries are going through a macroeconomic crisis right now. The inflation is skyrocketing and the entire economies are getting destroyed. For example, you would have recently read that in Pakistan, the November inflation data was 12.5%, which is very, very high. Similarly, in Turkey, it is going through a really hard time in terms of its currency depreciation. In fact, things have become so bad in Turkey right now that there is hyperinflation of currency in a way that is happening, and people are losing sleep over it. The same situation happened in Lebanon roughly 1.5-2 years ago. So this situation where emerging economies, for example, economies like India, Pakistan, Sri Lanka, Turkey, Lebanon, these type of countries, if they do not control their debt, it becomes like a huge pain point for them, especially when the economy takes a downturn. And one of the key things that triggers this downfall of the economy is high level of debts. But India has managed its debt relatively well, and we need to appreciate the efforts that has been done by the authorities. Now, the second key good thing that India has done from a macroeconomic perspective is that it has been able to retain the investor confidence. Now, this is an article which is dated 31st March 2021. So I'm deliberately showing you a data which is roughly 9-10 month old. What is the reason behind it? Because this was the time when the second wave of coronavirus had started and the first wave had concluded. And even during this time, India as an economy was still a very good destination for foreign investors to come and invest. So what does that mean? As Mr. Mukherjee was saying on his interview, that you know what, COVID crisis now, it will have multiple waves going forward, but it's not as if that it is going to create a tectonic shock in the economy. So that means that if investors had confidence 10 months back on the Indian economy, then they are going to continue to have faith on the Indian economy going forward also. This faith will not get lost because of COVID problem at least. Now, of course, a lot of people will now point to the figure that Akshat, a lot of FIIs have sold their holdings in India and have gone away. No, that was a general selling. It brought the market down. Now FIIs are back and they're buying. So this FII buying selling games will keep on happening. That is not the point. But long-term investing sentiment from foreign investors, it still looks very much positive. So there is absolutely nothing to worry about there also. Now, third and final pro point about the Indian economy is that there are two tectonic changes that are happening which are combining together. Now, one is the promotion of culture of entrepreneurship. Now, how many of you love Shark Tank? So if you have a Shark Tank joke, do post it in the comment. I would love to read. But anyways, coming to the point that with shows like Shark Tank, the culture of entrepreneurship is being promoted. So which is pretty good. It at least creates a cultural shift in India, and this cultural shift is going to benefit India from a long-term perspective. It improves the macro sentiments in a country like India, because you have to realize that in a country like India where people have less opportunities, if you ignite that spark that, you know what, go out and do entrepreneurship, a lot of people will jump on this bandwagon. The way people used to jump on the bandwagon of government job, if that shift happens towards entrepreneurship culture, lot many jobs will be created in the Indian economy. So if we take a 10-year viewpoint, there is absolutely no reason to panic. We are very much in a bull run scenario. Now all these facts are appended by the fact that the underlying technology canvas or technology architecture is doing really, really well. For example, many of the listed unicorns are pure tech plays in India. These are product-based companies that are organizing the unorganized sectors, which is very good. For example, if you take a look at Khata Book or if you take a look at Meesho, they are working to organize the unorganized sector. So these tectonic shifts, accelerated by the adoption of technology, is going to create a massive impact for a country like India. Now, is everything great in the Indian economy? No. So let me speak about two major risks right now. So one is that, like all emerging economies, we are witnessing high inflation, and this inflation can go out of hand also going forward, and this can become a problem. So I'll make a separate video on this, how to analyze inflation and how to integrate that into your stock market decisions. But to cut the long story short, high inflation is still a problem for emerging economies, including an economy like India. Second and more pertinent issue is that we are having trouble in terms of border skirmishes and in terms of neighbor relationships and internal political dynamics. Now, without getting into the politics of it, I am not speaking pro-Congress, against Congress, pro-BJP, against BJP, pro this party, pro that party. I am not saying any of that stuff. I am giving you pure specific facts that as India, we have a lot of challenges. There is economic destability that is plaguing Pakistan, because that will lead to a lot of infiltration and might lead to bad stuff. Similarly, with China, it keeps on exerting its influence via Pakistan, via Nepal now, and via a bunch of other different countries. And with all the Chinese backlash, all the Chinese aggression with Taiwan, India becomes the next target there. Now, I am not an expert when it comes to defense, international relations, etc. But I'm just simply telling you that all these border skirmishes with our neighboring countries, it creates a massive dent on our economy. If I have to bet on the most challenging economic situation that we might face, it might come due to these neighbor relationships. And again, from an internal political dynamics point of view, you all are smart, so you can figure out what I mean to say here. I simply mean to say that even internally, there is a lot of rift that is going on, and I'll keep the politics aside, but these are our major challenges. So with this information in mind, what is it that you should be investing in? So let us again go to Mr. Mukherjee and see what is he investing in, and then I will give you my commentary.
So we're looking at, in Rising Giants, if you ask me, three themes that we are looking to place. Well-run financial services companies, which will benefit from the next 2-3 year economic recovery. Specialty chemicals, which has been a favorite of ours over the last 2 to 3 years. So we've discussed these names several times: GMM, Pfaudler, alkyl amines, and there's a couple more in Rising Giants. And the third theme is, as you were discussing, the potential for well-run capital goods companies which are high ROC, cash generative, rather than being low ROC and struggling for cash flows.
So where to invest? So according to Mr. Mukherjee, he has outlined a few themes. So let me outline and add upon 3 themes that he's speaking. So the first key theme that he spoke about was financials, and I completely agree with it. I'm a big investor in the financial domains in India, and I really feel that small finance banks, for example, AU Small Finance, Equitas. So Equitas, I don't think is in Mr. Mukherjee's portfolio, it is in mine. So small finance bank are going to do really well going forward in the future, because if the unorganized sector move towards organized sector, small finance banks are going to play a very important narrative. Now then second come conventional banks. Now conventional banks are right now available at attractive prices. If you consider something like HDFC, ICICI, etc., they are all available at a decent price. I'm not saying that they are deeply discounted now. At one point they were. Now they have started climbing back up. So there are still good profits to be made, and these are stable banks. And if the Indian economy continues in the bull run, then these banks are going to give you really nice returns. And personally, I am very bullish about the AMCs and insurance company, Because if people get into the space of investing, AMC's business automatically grows. From that perspective, AMC becomes like a very good narrative in which you can consider investing your money. And insurance, of course, as the cost of healthcare increases, insurance becomes almost mandatory. So I've been saying for the last 4 months now that insurance is one industry that is going to skyrocket from this point, and I'm quite bullish about this. And all this fits into the financial narrative, because if an economy has to grow, then the finance sector has to grow. It provides the raw material, capital, for any kind of industrial growth to take place. So if this year you are believing that we will continue to stay in the bull run, then you have no other option but to invest in financial stocks, and you should start taking some positions in it. Now the second sector is the real estate sector. Now the story that is going on here is that the real estate sector has been deeply undervalued for the last several years, and now it has no other option but to go up from this point on. I do not completely discount that story, but here is my counter argument to the real estate growth. First and foremost, the prices of real estate in India, adjusted from a PPP perspective, is one of the highest in the world even now. So I do not technically believe that real estate sector is undervalued. That's one. Second key point regarding the real estate sector is that real estate sector, especially in tier 2, tier 3 cities, and the housing that will be catered towards the bottom 30-40% of Indians, that is a sector that might show a massive growth. So therefore, I am rather picking companies, for example, AU Small Finance Bank. Now these type of companies give a lot of housing loans for the real estate sector that caters to the bottom 30-40% of the economy. So I'm bullish about these type of companies, but when it comes to real estate developer companies or REITs company, I'm not too bullish from that particular perspective. Now, I'm not saying that my perspective is correct, but this is what my analysis tells me, and I'm sharing it with you honestly. Now, third and finally comes the resurgence in industrial demand, and Mr. Mukherjee was speaking about buying high quality capital goods company. I completely agree with this narrative for the simple fact that yes, the IIP data, the Industries of Industrial Production data, indicates that the industrial demand is coming back into the economy, and also the commodity prices globally for a large range of products like steel, iron ore, etc. is not very high right now. So from that perspective, companies like Grindwell Norton, and this is the stock that I'm looking at more closely now. So a company like Grindwell Norton is going to do fairly well. So I've started to aggregate this stock in small quantities as of now. If you want me to make a separate analysis of that stock, I'm happy to do it. I will do an entire video on that. But the hypothesis that the industrial demand is coming back, this is supported by low input cost of raw material. It is likely that the industrial growth in India is going to be high. This is supplanted. So word of the day today is supplanted. Let me know what it means in the comment section. So this is supplanted by the fact that China has been an aggressor nation, and there is a lot of backlash against China by a range of different countries. So this gives an opportunity for Indian companies to step in and start boosting its manufacturing, even to foster its local demand, right? Even if we are not exporting industrial goods outside India, there is enough consumption opportunities within India itself. All right. So this brings me to the next section, which is that, okay, let's assume there will be a lot of skeptics and they will say that, Akshat, you know what? Okay, fine, great. You're working with the assumption that COVID wave is not going to create any impact, and probably you are also incorrect and Mr. Mukherjee is also incorrect. Then what is it that we should do to prepare for a bear run? I assume that bear run will happen. So tell me some strategies around it. Okay. So first and foremost, you could consider investing in FMCG. I feel that FMCG is at a discounted rate right now. For example, if you consider something like Hindustan Unilever, it is still available at a discounted price. You can categorically take a look at it. The second hedging strategy would be to buy some specialty chemicals company. Now, there are a lot of specialty chemicals company that are trading at a very high valuation, and some of them are available at a decent price point. But those are slightly risky stocks. I would not talk about it. I would let you do your own research there. In case you want, I'll make a separate video on specialty chemicals. Now, why am I talking about specialty chemicals? Because of its use case. What happens with specialty chemicals is that a large part of the specialty chemicals demand is inelastic in nature. So that will not change even in an economic downturn. Third and finally, you can start taking some positions in companies that deal with gold. For example, these would be companies like Rajesh Exports, or these would be Manappuram or Muthoot Finance. So these companies deal with gold. In case there is a shock to the economy, what would happen is that the gold prices would skyrocket, and with that, the stock prices of these different companies will also rise. Very recently, Rajesh Export has given a breakout. I was already an investor in it. I have not sold it because that's a hedging stock for me. So I will keep it in my portfolio, but I am navigating the market with the hypothesis or with the belief that we are in a bull run, and this bull run is going to continue. And Mr. Saurabh Mukherjee is also stating a similar viewpoint. So I hope you enjoyed this macro analysis, and also a very quick comment would help. If you would want me to interview Mr. Mukherjee on this channel, if he graciously agrees, I will try to reach out to him. And let me know what you thought about this video and give it a thumbs up, and I'll see you the next time.